Hello and welcome to Stocks Advisor channel. Today we'll talk about Nikola Corporation, traded at Nasdaq, ticker name NKLA. Well, before we let's say go for discussion, let's first look at what was happening with Nikola recently. We can see that after having enormous, amazing growth by actually April, started by April of previous year, we went all the way to more than $90, and then we had a series of declines actually and spikes. And what is important to note here, you can see several trends. So first of all, you see this trend, which defines you, let's say, the maximums of your spikes. This is very important to note. And this is one trend. Also, it coincided with moving average 200 decline here in the second spike and then the third one. Therefore, we also can imagine that moving average 200 will work as a very strong resist level at the moment. And then what is important that each time we had this spike, it was a clear confirmation of channel breakage. And the first line, and that's now we can magnify a little bit to see this. The first one, we had this confirmation of the channel being broken and pierced upwards here. It was a classical confirmation. And then we had a nice spike and recovery. Then again, we had this channel formed here long term with a fake breakthrough, and then classical recovery. Again, the same. And now what we have here again for the latter very long channel, it was first ability, let's say inability to pierce it through by mid of April, but by May we saw the classical channel breakage taking place. And as always, for any channel breakage, it started actually from the middle of the channel here. We can clearly see this at the level of around 10 plus, and then actually we have the major recovery. Now the recovery is already zigzagging, so we touch this important dark line, which is resist level we discussed at the beginning of this video. So let's name it, we can call it actually R1. And then the question is, what's next? Because now we touched this one, it worked as a strong resist. We see this candle of today is actually, looks like a shooting star, but it's not entirely because it's lower with its body. But it means that it might give some small reconfirmation, and it's still not the end. We still can even pierce R1 because moving average 200, the red line, is still a very strong attractor here, and you can see that moving average 20 is trying to make magic cross up, so they pierce it higher, and in order not to be the delayed magic cross up when it will pierce already and the price did go high, we still might have some smaller decline here. Therefore, to play on this spike, we need to be very careful because we also can imagine the formation of the new declining channel here. So we need to be buying at the very clear and confirmed levels. Therefore, the first buy here would be starting, let's say, at the level between this one. It will be between 13.51, and the lower one will be just here. It will be 11.91. So let's write it as a first call out. 11.91 and 13.51. This will be the primary level to buy for rebounds, at least towards R1. And here I wouldn't be too greedy on taking the profit because the profit taking, although it's a very fastly moving one, but it could again, we don't need to forget, go for another line of correction. Therefore, I would just take the profit here from 10 to 15% from the money allocated in the position. Once you can do it, just take it, re-enter if you want, but don't be hesitant to take your profit. So with this being said, this is the first level to buy. If it still declines, it still might recover because, let's say, go a little bit lower and then recover because, as I said, moving average behaving really unusual to previous breaks. It's moving average 50, so there is still power to go high after the correction towards the first primary channel. First of all, let's write it here as a call out. So this will be 11.91 and 13.51. And speaking of the secondary technical channel, so if the first one is neglected, we need to look a bit lower, and it's clear here will be just these levels. It will be between this one and that one. Let's remove it first and redraw as a channel. So it will be between 9:40 and actually 10:49. So this will be the second technical channel where again we can rebounce but still decline there just on technical considerations if the first one is weak and it's broken. And then let's write it again. And then we will need to talk about risk mitigations, because here the risk mitigation won't be only the negative catalyst risk mitigation, but also we need to mitigate risk due to possible formation of the new declining channel. We don't need to forget about this, because still, if this peak is the last one, although as I said, because moving average 20 is trying to pierce upwards, it still might be not the last one. But if it's the last one and we really decline, we really need to be ready for, let's say, really major protection for ourselves, to major risk mitigation. And to understand here, because we don't have any principal levels to defend, we need just to do a mathematical approach and to look what was the percentage change overall in previous waves. So let's take this one. So I'm looking now at this one here. We can see it was 44%. Then if we take this one here before the recovery, it was again about 60%. And then if you look at the next one, so it's this one, let's make it smaller. I just put it in the right place. And then if you look at the next one, which is here, so before the recovery, it took again 69%. So each time before the recovery, it needs still to decline a little bit. Well, not a little bit, a lot, because, and it's increasing. So it's, let's say, in the range of 50%. Therefore, the next level we want, if we want to mitigate our risks here, we need to do it here. Let's make it 55. And then if we put our, let's say, level here at the 55, it will be 703. Therefore, the third level of risk mitigation, which will be, in this case, quite rare situations, not only negative catalyst, but also risk mitigation due to possible formation of the new descending channel, would be below 730. Therefore, anything that goes below 730 would be our last actually channel to buy through as a risk mitigator. With this position, with this stock, you need to be really careful and you need to know what you are doing, because it, as you can see, can show enormous, I think the biggest volatility for this year and the previous year on the market. So you really need to be knowing what you're doing, but also emotionally stable and prepared for this trade, because it can give even more profit, because this profit is for daily traders. If you are a midterm trader, you could go easily here to 30, even 50% on the rebounces, on the spikes, especially from the lower levels. But then you really need to know what you do, believe in what you do, and be patient, because if you exit too early, you will lose your profit. If you don't exit in time, you will also lose your profit. So take the profit in time. This is a very important message. And these are 3 levels to buy through on the rebounds, and taking also all major risks into the consideration. Quite interesting stock, very tricky, but if you know what you do, you have the strategy like this one. With this strategy, actually, you could have played with this one many times, and this time you could do it as well. So good luck with Nikola. If you like this way of analysis and this way of risk mitigation, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. And before we finish, we also need to talk about how to buy through the channels. And this would be because it's not a 5-portion play as always, it's a 6-portion play, because we need to be a little bit more cautious here. Therefore, the money you would like to play here, you can split in 6 portions. Then you can buy with 1 portion in the first channel. You can buy with 2 portions in the second channel if the price goes there. And if we really decline lower, you can buy with the remaining 3 portions below 730 slowly. Then on the rebounds, you can make, let's say, the quick profit 10 to 15%. And if you want to be more, let's say, mid-term trader, you can go up to 20-30% here. So with this being said, that's all for Nikola. Good luck with this one, and see you at another episode of Stocks Advisor channel.